Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. Hey, Steven. You mentioned he's talking even before I'm even on in the intro. That's so cool. Hey, well, today, Chairman Powell speaks. So I think we just get to chill for a few minutes. Well, not a few minutes, for about 90 minutes. It does look like, though, that the markets have been moving a bit overnight. So let's come in here and look at what we have. So we got another roll over here. Okay. Everything's rolling over. Roll over. No, not you, S&P 500. You need to stay. You need to stay upright. Okay, so ZN, we had a crawl back of rates yesterday. Kind of interesting. I mean, we're still above 3% though, but some pushback against, Powell is going to be hawkish today. So I really don't think I can make a bet here on whether Powell's speech will be hawkish or dovish. We'll have a poll though, okay? S&P 500 in the end ending up green. It's been pretty quiet overnight. Yeah, but a little bit of a pullback. Oil pulling back from the day before that. Natural gas is still up there. Gold and silver pressured again this morning, which probably means, oh, now look at copper. Copper looks good. But it probably means, oh, come on. Oh, well, okay. This is interesting. This is actually very, very interesting. So gold and silver are being pressured. The dollar has not really moved measurably from where they were yesterday. And Bitcoin is seeing some big pressure this morning, reaching 2,100. So we've got stuff going on. Well, okay, and then here we just had some news, right? So we've got personal income month over month, spot 2% versus an expected spot 6. Good reason for them to buy things up, I think. Consumer spending, spot 1 versus spot 5. So those are numbers show that people are pulling back on their spending habits considerably because they are not making as much. That's what that's saying right there. And what about the PCE? Where is US PCE price index month over month, negative spot 1 versus 0? None of that data suggests higher interest rates. That is all very good reasons for them to pull back. I'm not going to get involved. I don't think I really want to take a live trade today. I don't know. That was too fast of a move for me to participate in anyways. Let's pull up the music. Here's a pullback. Not really yet getting any serious signs here of like a spot that we could maybe participate. Oh, you know what? Let's put the pull on here, yeah? DS really did spike on it. You took something in that, huh? As of late, there was a time where I was really taking a lot of these trades during the you know, the really volatile news releases, and lately I have strayed away from that, kind of avoided a little bit. We could try doing something in here. I don't see any problem with trying to go short like 05. But the problem that I have is just that even though those numbers were really significant, I think that was a big data point, I think, showing that inflation really is slowing down because the economy is slowing down considerably, right? But the problem is just that whatever Powell says probably ends up being more significant, right? And so you might see really random and unpredictable flow here up until he speaks, and probably then you get a move that might make sense based on what he says in his speech. But then I bet you also see really bizarre moves as people try and claw back their losses and that sort of thing afterwards. That's really common. So hold on. Anyways, you know what this today reminds me of? I know that this is going to seem like a really loose comparison, but do you guys remember the day when it was rumored that China was going to give up on the trade war thing and make a temporary deal to try and wait things out until after the election? You remember that day? I don't know if all you would hear, but man, that was like that was another one of those. It was kind of at the end of a bunch of volatility and stuff, and it was like the big resolution to a huge issue in the market that had been going on all summer. China comes out, has the speech or whatever, and there was some little details that people were waiting on to try and make their decisions based off of, right? And we had this huge move, and I mean this huge, absolutely massive move. And I said, yeah, this is a big deal. I can probably just hold this. Might even be able to hold this for a few days, right? And then what happened? It came all the way back. Like the move happened, and then a good hour later, it came all the way back. And there was all these rumors on Twitter where these people were saying, the Chinese are fibbing. It's not real. There's no way that this can be real and all of that sort of thing. So it came all the way back. And then those people just kind of like stopped saying anything about it. And I kind of suspect that there was some people, they had taken a trade. And the reason they were saying what they were saying was because they had taken a trade. You know what I mean? But the point is that all the move of this magnitude, there is so much interest in what the result of the event is that people have an incentive to muddy the waters about what the result of the move actually was. And as such, we don't always get like the super clear, it just trends, right? The sort of move that I find is the most likely to create a trend is when you have a data release that just really breaks everybody's expectations. It's something that nobody expects to happen. Oh, those are the moves that like really last. But when everybody is expecting there to be some sort of move, they just don't know what direction it's going to be. It's usually not so clear cut. Even if the actual event was decisive, markets are just not informationally efficient. So remember that today. Be careful. Yeah. We'll see what it does. Good morning, Tobias. I had the poll; it was blocking. It didn't show you there. Oh, that's interesting. There was a big there was some spoofing going on there. Maybe pushing us back up a little bit. I'm a little concerned about. So what I've seen so far, I think reinforces my decision to not get involved in this portion of the action today, because it looks like people are trying to move it, and I'm betting that they're trying to position themselves for, Powell rather than, because they thought that there was something significant in that news or something. I was just reading this little study here because somebody made a comment on one of my TikToks, and I was like, okay, so what was he talking about? So I went back and reread the report, and what he was saying was wrong. He was saying, oh no, that was just like a self-selected sample of the people that were doing well. But when you look at everybody overall, that weren't doing very well. This was loan repayment, people with student loans. And the mistake they was making is that the group of people that, were not making the payments, because it was of people that were making payments in 2019, 75% of them expect to have no trouble paying it after forbearance ends. And he was saying, well, yeah, but when you look at them overall, it's 50%. And the problem with that is that when you look at it overall, why is it 50%? Well, because those people that weren't making regular payments in 2019 aren't required to make payments. Like, they're still in school, right? So it wouldn't really apply to them. I'm also hesitant to trade today. Somehow could be a big move coming, but it might be difficult to chase it. Yeah. Move like this really makes me nervous for sure. But there can be really big opportunities in it. If I do take a trade, though, I guess the point that I'm trying to make is that if I do make a trade, I'm not going to try and push it and like turn it into a swing trade over the weekend or anything. I'm just going to get what I can out of it and get out of there. Oh, well, here's an important point on that survey, too. If your occupation was different than your degree, or you didn't complete the degree, they're far more likely to expect not to pay. In other words, the people that are having trouble paying are the people that chose stupid majors or didn't finish. Yes, and of course the people that don't that expect not to pay are expecting a forbearance extension. That's hilarious. I find it very frustrating to try and provide any kind of real information on social media. So you kind of got two problems going on like Facebook, Twitter, TikTok. I feel like that TikTok and Reddit are the worst at this, though. Like, the first problem is that there's no real way to determine authority. So I was providing information on TikTok, or sorry, on Reddit. The thing was about the economic effects of student loan forbearance. And one of the things was they were arguing about, the article was basically that this was giving forbearance, to the people that least need it. And everybody was saying, well, that's not true because these people aren't making money. Well, the whole thing is that the forbearance is based off of last year's income, not the income that you're going to make when you graduate, right? So I merely pointed that fact out, and I was getting downvoted for it. It's like, forbearance is based on the previous year's income and not what your income will be when you graduate. So it will be the case that some of the top future earners will receive forbearance. Got downvoted for that, right? And then this person, this was the funny thing actually about it, is this person was like, well, see, it's trickle down economics. It works in this instance. It'll be good for the economy. So here this is hilarious, is they understand the cognitive dissonance about it. They're like, well, everybody always says that trickle down economics works, but in this particular instance, it's convenient to say that it works, because otherwise, how are you going to say that it helps the economy, right? So he's taken the trickle down economics side of things. And so then I pointed out that, well, the economists have done the analysis on this, and they don't expect that much stimulus to come from it. And there's kind of the thing with inflation is that the net change to inflation is expected to be like 0.1. Now, I think it could be a lot worse than that because of like second order social effects. Okay. But when you just do like the raw economic numbers, yeah, it's only like 1%. It's 0.1. It's like 0.1% inflation. It's not very much, right? The stimulus effect of it is not very much. So I say that. And they're like, well, I don't think that you even understand what stimulus is. Okay, yeah, I've only been in the finance industry for like 15 years now. Trade bonds every day, live and breathe finance versus some casual Redditor. And because I provided a couple of facts for you that you don't, that are inconvenient for the narrative that you are trying to portray, he must not know what he's talking about. You see what I mean? So there's no way for any person on social media to know that unless they look into my profile, right? There's no way built into the social media systems to establish authority. Because the reality is that this is a guy, because I went and I read through the guy's profile. This is not an economics guy. This isn't a finance person. Okay? He's making an assumption about me. He doesn't know anything about me, right? When the reality is that this is like my thing. How much inflation is that going to cause? How much inflation are we going to get in the future? That's my specialty, essentially. That's everything that our trading is based off of. Inflation, right? No way for that to be seen in social media. So that's the first issue. The second issue is this, is it seems like only the idiots comment. It's like if I come in and I say something and it's correct and they all like it, then everybody's just like, okay, cool, I like the video, and then they move on. Nobody comments about it, right? The only people that end up commenting are people that are stupid, right? That disagree with what is being said, or don't really know what they're talking about. So I get all of these, like the one that drives me nuts the most on this one. Oh man, it came all the way back, and we probably could have taken it along there, but it's still like rotating around on very low volume. I don't want to touch it. Anyways, so I made the video about, okay, here's how you follow the Federal Reserve and trade off of it. And the only comment on that video is this one idiot being like, oh, you know, don't there's no money in trading the Federal Reserve. It's just like the dumbest comment. I wonder if this person even trades. I don't know what prompted that person to leave a comment, but it's just really frustrating that here I have like the best guide for how to get involved in the news cycle and follow what's going on with the Federal Reserve. Is like literally the best guide out in the public about this subject, and the only comment on the video is some shithead trash, you know, that basically is saying what he's saying because he doesn't like the Federal Reserve. No, and I'm, I watched it. None of you felt compelled to comment, did you? Because you just agreed with it and you didn't, So there's a real problem with social media here with this. I actually saw this thing the other day, and they were saying, how do you deal with misinformation? Well, the best thing is to limit the reach of all posts, which I thought was a dumb idea. It's like if somebody posts something, you prevent other people from being able to reshare it, because it's when something gets reshared that like it gets reshared over and over and over again. Like if there's something gets viral, it gets shared over and over and over again. So if you prevent people from being able to share that same item over and over and over again and take advantage of the algorithm in that way, it's less likely for the bad information to be able to come up, because you know, somebody posts something and then the next day everybody's kind of seen a little bit about it. So then when somebody tries to post about it the next day, it's like way less likely to go viral if they're posting the incorrect thing, right? But the problem with that is then it's like, okay, but then there's no reason to use social media because you basically have no reach. Yeah, there you go. See, Jim Iorio was talking about this. He actually understands. He seems like he's a little bit more conservative of a fellow, but why comparing student debt forgiveness and PPP is idiotic is the fact that one came when we were on the brink of a deflationary collapse and one comes when we're in a period of high inflation. It's true. Like I said, the economic effect of it isn't huge, but it still comes in at the wrong time. And the issue I see with something that I'm learning about inflation is that kind of tiny little things, you know, a snowball can turn into a big snowball, right? Or what is the term? What is the term? Tiny little things can snowball. So something like student loan forbearance is maybe in aggregate, when you run through the numbers, a tiny little thing. But then everybody sees it and they're expecting inflation because of it. And they're expecting different changes in behavior. Like the whole thing, they're supposed to forbearance for these other people is supposed to end in January. Who thinks that they're really actually going to make them start paying in January? I'm really skeptical that won't get pushed back again. Really, really skeptical, especially if we're about to go back, you know, into a deeper recession or this difficult winter that everybody's talking about in Europe with energy prices and everything happens. They're going to extend it. Come on. And then it's really going to be inflationary, right? Because it's just, and you can't have a real discussion. You can't have an intelligent discussion on it about it on the internet because people are just poopy heads. Okay, Fed's Bostic. I am leaning towards a 50 basis point hike in September. Have to be honest, with those PCE numbers that we just got, I'm kind of leaning towards a 50 basis point hike too. US PCE price index month over month, negative 0.1. US core PCE price index month over month, 0.1 versus an expected 0.2 versus a previous of 0.6. Inflation really slowed down in the last month. And consumer personal income slowed down and consumer spending slowed down. The Fed is getting what it wanted. It's just not being reflected in the stock market. It's not being reflected in stock market prices, rather. Ooh, we're getting a move in oil. What's going on here? Oil pressuring 92. Oh, by the way, when we came in here today, Bitcoin wasn't looking so hot. Somebody's pumping it up today. They kind of saw that and they're like, "Oh, that's a problem. We better buy it." Actually, was probably good timing taking advantage of that sell because it probably was really easy for them to slam it back up to highs. George Piercase. I know everyone is quoting various French power contracts, but an interesting dynamic is that term structure is in contango rather than backwardation. Month ahead trades well above the day ahead, year ahead trades well above the month ahead. There's our whole thread. That's kind of the opposite of what you'd expect if there was serious near-term supply-demand imbalance. Then you'd see strong backwardation. And TBF, to be frank, we did see 1 month, 1 year backwardation in French power forwards in July. We also saw the front end of the curve in steep contango, while the back end of the curve went into aggressive backwardation last winter. But that's not what we're seeing right now, because despite lots of outages and high marginal costs, spot markets are surprisingly balanced. There are lots of reasons for this. So what's the explanation then? Well, George, markets are expecting shortages out of the curve, not current shortages. I cannot stress enough how careful you need to be about using futures curves as expected prices. So to jam out the rest of this, in normal forward futures markets, inventories are the load balancers, store or release, cued by a curve shape to balance supply and demand over time. But you really can't do that with electricity. Maybe when we get a huge EV fleet with this latent battery capacity spun up, as well as lots of hydrogen and other storage, but for now, not a thing. So that means the only way to respond to price signals over time is changes in supply and demand directly, but those are only available in the spot market because there's no inventory. A huge share of EU power demand is stuff that really, at the end of the day, can be turned off for a while without ending the world. Not good for growth, not good for workers at factories or what have you, but not the end of the world. It depends on how you measure, but the industry is 1/4 of total EU energy demand across all sources, roughly similar to households. What do we think happens when spot prices for power are greater than $1,000 megawatt hour? That's right, demand destruction. And a huge share of that can come from industry or commercial uses that are decidedly not survival oriented. EU power markets are not facing a supply-demand mismatch equivalent to 25% of energy demand, I assure you. That's why households aren't going to freeze en masse in the dark all winter. Rationing of power and gas will get intense, but the sort of mission-critical uses are going to get prioritized with demand cratering at large if prices are anywhere near where forwards trade. Okay, George, that's nice, but there's still a price on my screen that says the price is that high, and what it will be, because markets are never wrong. Two-sided markets are efficient discounters of information, but European power forwards aren't two-sided. Natural sellers of power forwards need to balance not only their forward margins, but also the capital costs of carrying the forward. So with volatility so high, with such extreme price moves, nobody has the capital to sell forwards. Eventually, the spread between cost to deliver power and forwards will get high enough for sellers to emerge, but that is at a price totally disconnected from what power will actually trade at in spot markets a year from now. Instead, it's all about capital and risk. Oh, that was such a good thread. I have no clue who this guy is, but that was an amazing explanation of that market. Too long, didn't read. Current European power forward prices are a one-sided market that does not reflect full information. There's enormous room to shut in demand away from critical household uses. That will happen, but it'll cause serious European recession in the process. Ooh, that was so good. That was good stuff. Did you enjoy that? Macro strategist, I'm following this boy. What does he say? What kind of stuff does he regularly tweet? And he doesn't tweet enough for me to put him in the list of people that we really want to follow every tweet, but cool. Cool beans. Okay, Feds Harker is speaking on Bloomberg television now. So something that happens here, is they get a bunch of interviews before Powell's opening remarks. By the way, I don't know if we are going to get I searched and searched and searched for this, and I don't remember what happened last year. I don't know if we get a transcript of his opening remarks or if we just have to listen to it as it happens. this move up in the treasuries really kind of changes the calculus for the trades on Powell being hawkish, though, doesn't it? I mean, if he is really strongly hawkish and it causes rates to rise, then this whole move was to your benefit, right? I'm still kind of a little, how do I say this? I think that Powell will probably err on the side of caution and not trying to roil markets. And so I think that you still have this kind of dynamic where even though he's being hawkish overall, because he's not going to come in and say, yeah, you should all sell the S&P 500 because we are so hiking rates so high, like really trying to scare the markets. And unless you do that, like, it's interpreted as dovish. I think that could be a thing. S&P 500 moving up there. Bitcoin building on its gains. I would prefer to see Bitcoin selling, but I think that they're making the right call, macroeconomically speaking, based on the movement of all of the correlated assets. I don't know, man. What is up with CL or not? I'm not sure. So the one thing that I keep seeing, and I haven't seen anything today, so I don't know why it's moving today, but kind of the larger picture thing that we've been seeing is that oil demand is dropping and OPEC is like thinking about cutting oil supply. So now why is oil moving here this morning? I don't think there's actually any news. Yeah, you didn't see anything. We could just double check. Sometimes, I won't see it on Twitter, but like it'll show up on Zero Hedge or something like that. A greasy move. Did it happen? Well, not quite. I mean, there may have been some reaction to the economic numbers that we got at the bottom of the hour, right? So, personal income was down, personal spending was down, PCE was lower than expected. Everything that we saw there was indicative of a significant slowdown / recession in the economy. And that would, I think, result in, commodity prices overall going down. You haven't really seen that in Kappa. You haven't seen that in copper. Copper is biggest winner today at 1.84% move. Soybeans behind it, though. But then on the other end of the curve, we got gold and oil. So not quite enough for me to say that, but that might, that might change after the S&P 500 opens. So let's just kind of wait. It's kind of a big move. I mean, it is, but it's very much in line with the volatility that we've seen earlier in the week, right? So over a buck on no news, yeah. There's definitely something going on there, but I don't think we can make too much of a conclusion from it at the moment. At the same time, like, why is the S&P 500 buying so aggressively here? I don't know. They better hope that Powell isn't planning on shock and awe in his opening remarks. Because if Powell comes in and is shock and awe, then he's just going to cut the S&P 500 down, and that's going to be extra ugly. Oh boy. Okay, so Harker is on CNBC and he's saying he is not in the camp of people that thinks that in order to get inflation under control, employment needs to get above 5%. Doesn't agree with that. Likely there were more, well, there's never more buyers than sellers. But clearly the sellers were more motivated than the buyers were. Sorry, did I say he? Harker is a girl, right? Oh, no, he's a guy. There are more women on the Federal Reserve Board than I think people realize. There's actually a lot of women on the board. Okay, so hold on. Let me come in here. I want to see something. You know, I didn't think to come in and look at the PCE numbers on their website. Here's the current release. So this was July's number, right? I thought that somewhere in here there was. Here we go. Now, this report is like way more difficult to read and see what's there in there. Why do you say there can't be more buyers than sellers or vice versa? Because you have to have two sides to a transaction, right? If there were more sellers than buyers, who were they selling it to? Right? They had to, somebody was buying it in order for there to be a transaction, right? So really what it means is that the sellers wanted to sell it more, and so, you know, in order for the sellers to be able to sell as much as they needed to, the price had to decline. But never say it there were more buyers than sellers, because that's not exactly the way that it works, right? It's what it does is to the uninitiated, the people that don't understand how a limit order book works and don't understand what order flow is, you know, it gives them a false impression that leads to a lot of other erroneous conclusions. So it's better to just not say it like that. Anyways. Okay, Vince Harker's done speaking. Treasury's still right up there. But you're advanced, so I guess. But really, you were talking to Morgan K, right? Maybe there were more buyers than sellers. Now Morgan K, I recognize that name. You're somebody that doesn't speak too much, but has been around for a long time. But I'm not exactly sure. I need to. Oh well, that would be creepy. I should start a spreadsheet to keep track of like who's been here and like when they first started coming and what their interests are, so I can send you Christmas cards and stuff. Man, didn't I just reset things? Okay, well, we're gonna... looks like the 10-year is extending on its gains back to 118. 118 was a spot that we danced around a lot on the volume profile, right? Yeah, 118 even. Oh, actually, not quite. Really, that's more from, what was it, earlier in the week? Thursday, Wednesday, Tuesday. Back on Tuesday. The crazy thing here is that like almost all of last week was hawkish. So, you know, even if this move ends up being like a really significant move and they get above 118, it's still only a slight pullback from when things got pulled in here before. So from the CPI is what it was. Ever since the CPI, and then there was a little pushback, and then ever after that it was just down. And during that whole time period, it was, you know, focus on what Jerome Powell will say. There was the CPI at the beginning of August. Although this chart, the scaling on this chart is a little deceptive, I think, because like 118 looks like still a ways away, but it's only like 5 ticks. Jiwi, hi, how are you doing? That's a name I don't recognize. Yes, Powell speaks at 10 o'clock Eastern time, so in about 45 minutes. Oh, we should be setting that in the I want to say that this is like the most important speech of Powell's career, but it probably actually isn't, unless he like goes shock and awe. If he goes shock and awe, then this is like the biggest speech of his career, right? But I don't know. This that last release. We've been getting a lot of conflicting reports and stuff like that, right? But that release in particular really puts me into the camp now of, yeah, the economy did really slow down. It might not be resulting in unemployment, but things did cool off. Is it really zero commissions? Not quite. So my understanding, Jiwi, although I have never used Tradeovate, my understanding is that you don't pay a broker commission. You still have to pay the exchange fees, which is the majority of your commission anyways. So also, it's not $2,400, right? Isn't it only $100 a month to get that treatment? So I don't know. Oh, I need to switch back over to here. I want more serious music. You know what I mean? Let me see here. No, that's not what I want. Wasn't there one that was just like chill out? Else? Christmas. What? There we go. You see, that's not as upbeat but I feel like it's a little bit more serious and appropriate for the moment. Am I wrong? It's either that or we just need, blistering drum and bass. But their drum and bass isn't blistering. It's a little. I don't know. I really want to know, what they do to make their music more suitable for background music. It seems like there's a style to it, but I can't put a finger on what it is that they are actually doing. Because the music that I produce usually would not work well in the background at all. It would just crowd my voice out and take all of the attention, because it's all about these big leads. And okay, so Bullard is being interviewed on Bloomberg now. Are starting to see a little bit more of a rise in gold here. I'm kind of wondering how far Bitcoin can go with the move that they're doing. I think that the Bitcoin move is probably the most interesting one right now. Oh, it was 2,400 for the whole year? That might be true. I thought it was... I thought you just do it by month and that it was like $100 or $200 a month. I guess it must be $200 a month. Let's see what you got here, Mike. Politics and economics overlap. However, what I learned from being on the floor was never talk politics, talk economic facts, and let interpretation be private. Yeah, well... Because, on the floor, there's lots of, let interpretation be private, as trader faced off against trader, and they knew you're thinking they shorted you into bankruptcy without you ever knowing. Yeah. Yeah, no, that is interesting. That is an interesting point, which is like, for me, it's probably to my advantage to not tell you what I actually think about certain facts. Yeah. I don't think that for my current situation, that overall speaking, that really applies for me. Because a large reason why you guys listen is, and why what I do is instructive, is even if you don't agree with me, you can kind of go down the process of, okay, how does he take an economic fact and turn it into something that he could potentially trade, right? Yeah. But if I was really popular, I might need to switch, and then I probably would have to have that mentality where it's like, yeah, I can share information, but I don't want people to know what my trade is. I think you're right. Well, and this, the bigger thing is that, like, they say that, like the controversy can really elevate you on social media and attract more people, more followers to you. But that hasn't seemed to be the case for me. I think it's because it's always over specific issues, whereas the places where I've seen controversy are maybe higher level. And I think the issue is that when I get into higher level issues, my takes aren't necessarily controversial. They should be controversial. That is to say that, the big change that I'm kind of making now is a larger focus on integrity, excellence, and teamwork, right? And those things are not valued by society right now, and people might say that they do, but when you actually look at things, I don't think that they really understand what that even means. So I like to say, the thing that you're going to learn here, the thing that you can pick up that other people aren't teaching you, is how to pursue excellence. What excellence actually is, right? I think that we just think of it as a generic word. Like, you remember Bill and Ted's Excellent Adventure, and they say excellent all the time. And as far as I can tell, there's no significant reason or deeper meaning behind why they use the word excellent. They're only using the word excellent because to them it means something kind of generic, like that it's good, but it's a generic word and it's a long, fancy sounding word, and that's why they use it. But to me, excellence, there's a really interesting and specific meaning behind the word. So for instance, I could come in and I could say, our focus is hardcore and not excellent, right? So, because to me, hardcore kind of implies that you're sacrificing something of yourself in order to achieve what you're doing, right? And I don't necessarily like that, that word. But when you say excellent, what you're saying is that there's a quality about the work that makes it good, but it's not just that it's good, but that it's like noteworthy good, right? There's something about the quality of the work that is noteworthy, that is worth stopping and looking and appreciating how well it was done. So there's a really good example. I wish I could show you. I don't know how I would be able to find the video, but there's this guy, okay? And he is working at some sort of a concert venue, and he's putting up like those kind of plastic chairs that, you like stack on top of each other. If I was doing that, I would be taking chairs off of the stack and then putting them in line and, doing it maybe 2 chairs at a time, but going as fast as I could. And what happens? This guy, he tips the tower over, and with the chairs on their side, he can then pull them out and just kind of throw them, and they just slide into place. So he's able to put up like 50 chairs, just like boom, 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 done. Like crazy. That's excellence, man. That's the way he's doing it is like, oh, wow. Oh, well, hold on. So Bullard is speaking hawkishly right now. And they concluded his... Oh, hold on. Oh, okay. This is interesting. Okay, some ECB policymakers want to discuss a 75 basis point rate hike next month due to a deterioration in the inflation outlook. In other words, they're saying that the economic weakness is not going to cause the ECB to back off on rate increases. That's what, so, oh man. This is just, oh man, I'm even more hands off because I don't think that you should necessarily be me. I don't think that my mind is into trading this. So what we have happening here is, first of all, we had a really big set of economic news. We got a bunch of Fed speakers. We've got Chairman Powell speaking here in 30 minutes, which is anticipated to be a really massive event. And then the ECB, not to let the Federal Reserve steal the spotlight, is now having a news item leaking out that is incredibly hawkish, basically saying that they are very, very concerned about inflation in the Eurozone, and that even though it looks like the Eurozone is going into a recession, that is not going to cause them to back off on rate increases. and that they all want to do 75 basis points. But who cares about Lagarde and the ECB? I know it's so like the thing that is making me like really hands off about this is that I don't want to be trading on Lagarde. Yep, Europe is screwed. I mean, I keep looking at this and I'm hoping that like what I'm seeing over in Europe is just selection bias and that it's not actually as bad as it seems. Because everything that I read about it makes it like, oh man, Europe is just so screwed. But then I sit here and I look at it and it's like, well, the market isn't really saying that like it's the end of the world for Europe. Like they're back above parity, for instance. I don't know if, well, not really. Still have a good life here, but I am lucky I don't have a gas heater. Over here where I live, everything is gas. That's the only way to do it. It's natural gas. It is really interesting. I mean, people, here's the thing. I wonder how this plays out politically in the long run, because I don't think that there's any way to look at the especially in Europe and not say that somebody made a policy mistake somewhere, right? Am I right? But it's just like, I don't actually see any accountability right now. Like, I don't see anybody saying, ah, well, it was this party and it was this politician and this group of people and the environmentalists and stuff that are causing these problems, and those people getting kicked out of power and stuff like that. That doesn't seem like that's happening. It's just kind of like, well, it's just a thing and it is what it is and we're going to have to deal with it. And no, somebody screwed up. Somebody screwed up. Do you have a live feed to the speakers? Well, so I could open it up, but it's Bloomberg, so I wouldn't be able to stream it to you guys. But I can watch it. But I think Bloomberg TV is free anyways. But I definitely can watch it from my Bloomberg Live subscription. But we'll have the Fed, because that should be on. Let me see here. YouTube.com/Federal Reserve. It should be scheduled on. Oh, it might not actually be on the main Fed, huh? No. It'll be YouTube. Here we are. There we go. Jackson Hole Symposium opening remarks. I'll pull that down here. In fact, I will place it over the S&P 500 chart, if that's okay. Theater mode. Took the CPI trade sim. You mean PCE? No, the current Fed talks, those weren't talks, those were interviews on Bloomberg TV. Not recession, but depression coming from Europe. Okay, but how do we, can anybody tell me how do you define it as a depression? Yeah, the PCE. Dude, this is, but isn't this exactly what I warned you about though? Is like, you would think okay. Bullard saying that if the data is strong, he'd lean towards 75 basis points. So again, you know, like those, the economic numbers that we got this morning, those would be kind of economic numbers that would make me think that we could trend all day, right? a Federal Reserve chairman speaking, that's a sort of event that, you know, depending on what he says, would make me think it could trend all day. But what is happening, and what I've learned from experience, is that when you have an event with that much interest in it, it actually makes it very, very difficult for it to trend. And that, like, you will get this sort of a thing where, like, a news event or other sorts of things will just pop out of nowhere that really shouldn't be coming out at that time, but they do. It's kind of eerie. Like, I'm not trying to be like conspiracy theory or anything, but when you have an event of this significance, it always happens. Like, seriously. You shorted before Bullard started to speak. Well, you got really lucky, boy, if you made it something on that. The quick one on news: Financial Juice versus Metastock. Well, so I am not familiar at all with Metastock Zenith. Oh no. Okay, that's different, Prashant. Okay, so Financial Juice. So the question is, if I'm going to pay for one or the other, which one should you pay for? I would get Financial Juice first. So Financial Juice gives you like a live audio feed, right? And news that is very specific to the sorts of things that we trade in the futures, right? Metastock Zenith is kind of like a Bloomberg terminal. And I have that right now. I've been doing a trial for it. Actually, I probably should take a look at that and see when that's ending, because I don't know if I want to continue that. But you can get a lot of good information out of that. If I was like a stock trader, I think that would be a really valuable resource, because it really lets you go in and quickly see things about a company that you might need to know on the fly if you're trying to follow a stock that you never heard of before. Although there might be other online sources that might be just as good and cheaper. But so that's kind of, they're kind of geared towards different use cases, right? For what we do here in futures, Financial Juice is more suitable. And I'm not just saying that because I'm an affiliate and have an affiliate link in the video description, okay? I really like the Metastock Zenith thing. The Metastock Zenith has kind of been like a little secret that we've kind of been keeping under wraps and haven't been saying anything about. Because it's basically it gives you Refinitiv icon, gives you access to Refinitiv icon. But my experience with it so far has been that for what I do in futures, it's not as useful. Well, they've bounced back up here pretty good. So there does appear to be maybe a little bit of a liquidity hole at 09. And wow, Bostic says that he wants to be 100 basis point higher than where we are now. Financial Juice kind of replaces TweetDeck. It does. It does. Although I would still keep TweetDeck up. I mean, you can add stuff into your feed and everything, but I really like that you got like multiple columns in TweetDeck and making your own lists of people and stuff. Oh, you know, that reminds me, Zero Hedge got banned on Twitter yesterday. Is that still in place? Because they're not, that story didn't get pinned by them. Yeah, I've kind of been wondering. The reason why that interests me is because I don't really like Twitter. That's really what it comes down to. It is definitely the best source for breaking news and for finance, and that's where the day trader community lives, is on Twitter. But I wouldn't mind if it was somewhere else. Maybe if there was somewhere else that had a tool as good as TweetDeck, and all of the traders moved over to it, that would be pretty cool. Or maybe Zero Hedge went and created their own Twitter of sorts, Trader Twitter. That would be kind of cool. So that's kind of why I was like, well, maybe, if there was anybody that could get the trading community off of Twitter, it would be Zero Hedge, right? So, but probably it's never going to happen. Hopefully Elon Musk buys Twitter and fixes it, right? I was thinking about 06, but so should I follow who you follow and create my TweetDeck? Well, so if you go on to my Trading the News video, I have a link in there to a Twitter list that I created that you can follow. And that has like the news squawks. And then there's another list of traders. But I would recommend you build your own list of people that you like to follow, Bostic says my concerns are weighted to inflation, not the labor market. There you go. Well, I don't know. I don't think that little jump up there had anything to do with Bostic talking, but did kind of come back. I feel like that 3.05 is, again, seems like an okay spot from a risk reward perspective, but are you going to be able to hold any adverse excursion against it? I don't know. It looks like it's already going more than that, right? Are these moves actually as big as they seem? Not quite. I'm so tempted to take a trade right here at 3.05, but like we got 15 minutes before Powell. Like that seems, I don't know why I'm feeling this desire to trade, because it seems like, based on the things that I've said earlier about how I want to trade this a really bad idea, right? So 65% hawkish on the poll. Well, I'm not surprised. Here's the thing. The federal, how do I say this? Struggling to find words today sometimes. I don't know what the deal is. It seems obvious to me that the Federal Reserve is not happy with the S&P 500 being up right now, and they aren't happy with the current financial conditions. I'm sure that those economic numbers and everything are going to be really encouraging, and maybe suggests that, hey, we kind of do have it under control. Although I'm a little concerned, like, you don't want to just you make conditions easy now because of that. I think that, again, you want to kind of keep things high still. So yeah, that's why I think the majority of traders and I myself are kind of like the default option here is that Powell is going to be hawkish. It's just the problem is that can Powell actually be hawkish enough to move the market? Right? Because it doesn't want to say anything that would harm the economy. And so you can come in and say, yeah, all of the things that like Bostic and these guys on the TV are saying right now. If Powell comes out and says that stuff, market will still come out of that with a impression that's dovish, I think. So, right, it's kind of a funny. We'll end the poll like right when it starts, so you can still make your call. But like, I think that I would be voting Hawks, but I might actually take the trade as Dove. But I was thinking about buying 05 there, right? So I don't know. I think that ECB news that come out, even though we don't want to trade the ECB and it's kind of annoying, that it is a significant point that they're happening, which is like Europe's going to go into a recession and they're going to have to keep interest rates high. It's not very good. That's not good. Reading through things, making sure not missing anything before things start out. I'm a bit surprised, I guess, because the majority of people thinks the bottom is in and inflation has peaked and this rate hike cycle will not be as high as expected. I'm not so sure that that's what people think. I personally have always read this, like the market kind of saying that this is the peak of the cycle and that there will be rate decreases going forward and everything. First of all, I don't believe that that's actually what's going to happen, and I think that people might misinterpret what the markets are saying because there's all sorts of weird things going on with SOFR and other kind of structural supply and demand issues. But the narrative that I've always seen is, the market thinks that we're going into a deep recession, and that's why they think that the interest rate cycle is peaking. And not that they think everything's hunky-dory and inflation is peaked and the economy can continue on unfettered. I don't think that the current economic news supports that theory. The whole rally from the lows was based on this assumption, it feels. So I believe that the rally off of the lows was primarily driven by liquidity needs, that there is money coming into the market from people contributing to their 401ks and everything, and big firms covering their shorts. And because it's been like it's been a hated rally, right? Like, I think that overall traders are still, like, sentiment is really poor and that they're very bearish and that they've been hating this rally, right? And more so than that, it hasn't just been like easier rates this whole time either. Yeah, and a lot of buybacks going. Yeah, buybacks are a major factor. Yeah, like, I don't know. So when it comes down to interpreting what the market is trying to say, the first thing that I always say to myself is markets are not informationally efficient. So the direction that the market has just moved and the prices that they are at is not actually reflective of all available information like people say that it is. So I have to come back and look at what is all of the available information. Well, I like to start with the information that is the best at predicting future orders, which are the numbers that we get about flows. And at the beginning of the month, the flow traders from Goldman Sachs were telling us that we were likely to see a melt up. So I think that says to me, okay, so probably our best theory for why the S&P 500 actually has melted up was because of those flows. Now, so now we have to go into, so what do the market participants actually think though? Because that's really the question that we're asking, right? And so for that, I think that I have to go to like market sentiment indicators and stuff. And market sentiment has been very, very poor. And even though I'm sure it's improved, it's still been really, really poor. So but more to the point, the current market pricing does not match up with the Fed projections of where interest rates will go, do they? Some gamma exposure just got touched in the treasuries. S&P 500 giving back its gains, by the way. Giving back its gains. So the market expectations of rate increases do not match the Federal Reserve's rate increases. Why? Why? Well, there are a lot of people out there saying that inflation has peaked. That's true. But there's also a lot of people out there saying that this rally is all hogwash and that we're going to get smacked back down. So which is it? Is it just that inflation is peaking because supply constraints are passing? Or is it that we're going to be going into a recession? My personal thought is that the economy could go into a recession, like a deep recession, but right now the recession that you're getting has more to do with imports and exports than anything else. Okay, and so it's a possibility that we go into a deep recession, but I don't think that it's like for sure that it's happened yet, right? And on the split side, has inflation peaked? I think probably not. I think probably not. So that kind of sets us up for this thing where I think that you could kind of get whipsawed. Like, I think that the market is going to have to adjust and, you know, raise their rate expectations to be more in line with the Federal Reserve. And then at that point, after that's happened, then we could see things flip around where the rate increases and the energy problems in Europe all kind of combine to create a really ugly recession. I think that such a recession could be very brief, but there's reasons to be scared about the winter, right? That's kind of what I'm thinking. And so when we're coming into this, I think that the Federal Reserve thinks that the market's rate expectations need to be higher because the financial conditions right now are actually somewhat easy. So he is likely to say something hawkish. But whether that ends up being a buy or sell from here is unclear, because I think that you also have a very high risk of Powell coming and trying to be as hawkish as he feels like he can be. But the market's still interpreting it as dovish. At some point, I was trying to avoid all these news around the market because I feel it doesn't help me in trading, but I'm just too interested in the topic. News matters so much to the flows, right? So like the whole discussion that we just had, does that directly lead to a trade? I mean, you could manage a portfolio that way, be awfully risky, How strong is our ability to actually predict something like that, right? But you notice that I'm kind of going through all of the options. This is why my brain, the unique qualities of my brain are really beneficial both to me and to all of you guys that are going to go, that are trying to trade, because my brain wants to go through everything, right? It might be hard for a regular person to stick with everything that I just said there, because at times it's going to seem meandering and, where is he going with this? And is he getting off topic? Is he getting pulled off on a tangent? Right. But there is a point to all of it. Right. And I'm giving you a complete and thorough synopsis of what the current market thinking is. And doing so gives you the context necessary so that when something happens, you can make the determinations about how it's going to affect orders, right? Because it comes down to those specific points where news does move the markets, but how the news is going to move the markets can seem kind of odd and contradictory and doesn't do what it's supposed to. And the reason is because it's not actually the news that moves the market. It's the orders that are triggered by the news that move the market, right? And what orders get triggered by that market kind of ends up being this complicated thing, because people already have positions on. They get stopped out of things. They try the counter trades. There's liquidity and demand concerns. There's liquidity holes, So, and this is where you get a day like today where you had economic news and you had the ECB come out, and now we've got Powell speaking in 5 minutes. And, how is it that was dovish and then hawkish? And because there's probably some people that took a long on the S&P, on the treasuries off of the economic news, and are quite dismayed that they lost all of their profits before Powell started speaking, right? And how do we explain all that? Because orders move markets. Okay, so now a key thing here is I don't know if we get a transcript at the beginning or not. Couple of things coming through here I want to read. Liquidity in the 10-year is a little bit better than I thought it would maybe be. You would think that, well, so if you look at the 10-year up here, I mean, the liquidity is terrible, right? You might actually see it get even worse when Powell starts speaking. Rumors about an EA Amazon deal after Microsoft and Activision happening would be the next big takeover. I hope EA games will get better. Ugh. I don't know if Amazon should be allowed to make a purchase like that, but Amazon does already have game developers, don't they? Okay, so we are going to end the poll. Just going to point that out now. Am I getting... Okay, here we go. So I'm going to unset that. We're going to turn this off.
Good morning, everyone. Esther, thank you very much for the opportunity to speak here today. At past
Oh man, look, the liquidity all completely bold.
topics, such as the ever-changing structure of the economy and the challenges of conducting monetary policy under high uncertainty. Today, my remarks will be shorter, my focus narrower, and my message more direct.
Oh boy.
The Federal Open Market Committee's overarching focus right now is to bring inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all.
That's hawkish.
High inflation fall heaviest on those who are least able to bear them. Restoring price stability will take some time and requires using our tools forcefully to bring demand and supply into better balance. Reducing inflation is likely to require a sustained period of below-trend growth. Moreover, there will very likely be some softening of labor market conditions. While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation. But a failure to restore price stability would mean far greater pain. The U.S. economy is clearly slowing from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession. While the latest economic data have been mixed, in my view, our economy continues to show strong underlying momentum. The labor market is particularly strong, but it is clearly out of balance, with demand for workers substantially exceeding the supply of available workers. Inflation is running well above 2%, and high inflation has continued to spread through the economy. While the lower inflation readings for July are certainly welcome, a single month's improvement falls far short of what the committee will need to see before we are confident that inflation is moving down. So, we are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. At our most recent meeting in July, the FOMC raised the target range for the federal funds rate to 2.25% to 2.5%, which is in the summary of economic projections range of estimates.
Oh, that wasn't a real order.
Where the federal funds rate is projected to settle
Darn.
in the longer run. In current circumstances, with inflation running far above 2% and the labor market extremely tight,
I missed a really good opportunity there. That's okay.
July's increase in the target
Probably shouldn't be doing it anyways.
5 basis point increase in as many meetings, and I said then that another unusually large increase could be appropriate at our next meeting. We are now about halfway through the intermeeting period. Our decision at the September meeting will depend on the totality of the incoming data and the evolving outlook. At some point, as the stance of monetary policy tightens further, it likely will become appropriate to slow the pace of increases. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. Committee participants' most recent individual projections from the June SEP showed the median federal funds rate running slightly below 4% through the end of 2023. Participants will update their projections at the September meeting. Our monetary policy deliberations and decisions build on what we've learned about inflation dynamics, both from the high and volatile inflation of the 1970s and 1980s, and from the low and stable inflation of the last quarter century. And in particular, we're drawing on three important lessons that I'll highlight. The first lesson is that central banks can and should take responsibility for delivering low and stable inflation. It may seem strange now that central bankers and others once needed convincing on these two fronts. But as former Chairman Ben Bernanke has shown, both propositions were widely questioned during the Great Inflation period. Today, we regard these questions as settled. Our responsibility to deliver price stability is unconditional. It is true that the current high inflation is a global phenomenon, and that many economies around the world face inflation as high or higher than seen here in the United States. It's also true, in my view, that the current high inflation in the United States is the product of strong demand and constrained supply, and that the Fed's tools work principally on aggregate demand. None of this diminishes the Federal Reserve's responsibility to carry out our assigned task of achieving price stability. There is clearly a job to do in moderating demand to better align with supply. We are committed to doing that job. The second lesson is that the public's expectations about future inflation can play an important role in setting the path of inflation over time. Today, by many measures, longer-term inflation expectations appear to remain well anchored. That is broadly true of surveys of households, businesses and forecasters, and of market-based measures as well. But that is not grounds for complacency, with inflation having run well above our goal for some time. If the public expects that inflation will remain low and stable over time, then, absent major shocks, it likely will. Unfortunately, the same is true of expectations of high and volatile inflation. During the 1970s, as inflation climbed, the anticipation of high inflation became entrenched in the economic decision-making of businesses and households. The more inflation rose, the more people came to expect it to remain high, and they built that belief into wage and price decisions. As former Chairman Paul Volcker put it at the height of the Great Inflation in 1979,
quoting Volcker,
in part on itself. So part of the job of returning to a more stable and more productive economy must be to break the grip of inflationary expectations. One useful insight into how actual inflation may affect expectations about its future path is based in the concept of rational inattention. When inflation is persistently high, households and businesses must pay close attention and incorporate inflation into their economic decisions. When inflation is low and stable, they are freer to focus their attention elsewhere. Former Chairman Alan Greenspan put it this way: for all practical purposes, price stability means that expected changes in the average price level are small enough and gradual enough that they do not materially enter business and household financial decisions. Of course, inflation has just about everyone's attention right now, which highlights a particular risk today. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. And that brings me to the third lesson, which is that we must keep at it until the job is done. History shows that the employment costs of bringing down inflation are likely to increase with delay, as high inflation becomes more entrenched in wage and price setting. The successful Volcker disinflation of the early 1980s followed multiple failed attempts to lower inflation over the previous 15 years. A lengthy period of very restrictive monetary policy was ultimately needed to stem high inflation, and to start the process of getting inflation down to the low and stable levels that were the norm until the spring of last year. Our aim is to avoid that outcome by acting with resolve now. So, these lessons are guiding us as we use our tools to bring inflation down. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply and to keep inflation expectations anchored. We will keep at it until we're confident the job is done. Thank you.
Okay, that's it. That's it. He's done. My, oh my. So, only about a 10-minute speech. I don't think that he could be more hawkish. I think that I really liked a lot of the things that he said there to kind of put things in perspective about, you know, why the Federal Reserve has to pay attention to that so much.
So also keeping an eye on
But
the US 2
does the market actually push for higher rates as a result? I'm not so sure.
Again, as Powell speaks at
Kind of looks like somebody's buying it here.
Less 2023 rate cutting than before Powell.
So, look at him go. No. I guess I have to puke it. Right there. Yep. Well, that sucks. Sucks for my sim trade, but you know, that was just kind of playing around anyways. We could see some resistance up in here though. Just clear things. Not entirely sure where the holes will be. Seems like it's just a little bit too slippery to kind of find any level to really rely on. The rates are coming down now about 4 basis points so far though. And what are we seeing? Well, during the move we saw some flattening, but that is evening back out. So I think I want to withhold any kind of final judgment here because they may be doing something in the yield curve. That speech was for the DC crowd, not us, says Connor Sean. It does look like they're going for the cynical play that we kind of were worried about, which is where Powell comes in and says just about the most hawkish rhetoric that you could get, and the market still says it's dovish. I don't know anywhere where you can get any kind of metrics about gamma exposure for free, unfortunately. So I would say the flow did come in pretty strongly to the upside. It kind of looks to me like, in terms of the amount of volume that went through and everything though, that you might have seen some people go short over here in the treasury while he was speaking, and that move was like people taking profits and so forth. There might be more profits. I think that there's probably a lot more movement to go in the next hour. Darn. I've been seeing a couple of places where I thought maybe I could try and catch the edge, but they're just a little bit too quick for me. That shift back down happened a little too quickly for my liking. Well, there's definitely people taking trades in the micros. It's kind of all over the place, to be honest with you.
Report for August 2022 is now available on the feed.
See, I wanted 03. But for all we know, it's going to come right back down to the... That was one of the most hawkish speeches of Powell, in my opinion. Yeah, you know, the thing that stands out to me the most is that he was quoting Volcker in it. You know, I really do think that he think you're Jerome Powell, okay? You know the situation. I need to make financial conditions tighter. Market doesn't seem to want to believe me. You know, so there's a risk that I come out and talk and they go dovish again, because they've done that like in the past Federal Reserve press conferences and stuff like that. So what do I do? What do I do to convince them that I'm serious? Ooh, I know. I can quote Volcker. So we did, but the market still going. So I don't know. It's coming back though. It's a little bit, it's just too quick for me to get a handle on, unfortunately. You can definitely see anytime that there's like a one lot out there, y'all's have been taking too many tips from me. They get them every time. And at the even numbers too. Is there a preference? No, I don't think so. He had his opening remarks, and I think that's it. I could try 05, but I would think that if somebody's really aggressive about this is dovish, rates are going to come down sort of a thing, that around this area, which was kind of where price was before the big slip lower in the treasury, around, and this is also where the buyer's cost basis is at 20, that's where I would be trying to make my stand. The S&P 500 also dipping during the speech and then recovering afterwards. So like I said, the knee-jerk reaction was hawkish like we expected, but that doesn't mean that that's how it's going to turn out over through the end of the day. And I would expect to see a lot of people saying all sorts of crazy things to justify why you should be long or short. Okay, 05 wouldn't have been bad. Wouldn't have been bad.
Greed index currently showing 52 out of 100, which does indicate neutral.
Those look like
Crypto
20
fear
is the
increased in
place.
27 out of 100, also indicating fear for them.
Ouch. Oh man, these guys over in the micros, they're being awfully impulsive about these moves. That's interesting. Bloomberg Business reports it is true that the current high inflation is a global phenomenon, quoting Chairman Powell, saying that the Fed's responsibility to achieve price stability is still the priority despite high inflation. Okay, that last sentence didn't make any sense, but whatever. Bloomberg is not always the best at that thing. Here's L5 again. There's gonna be some excursion against us, huh? O5 is a price that I've kind of been staring at many times. I'm a little surprised that we're still in that range. Missed the speech, so bullish or bearish for equities, pretty much back to start. So Kevin, the speech was about as hawkish as I would expect that Powell could really get. He was quoting Paul Volcker and explaining why their focus is much more on price stability right now than it is on employment and so forth. But after he was done speaking, the market rolled back from what he said. So that could be profit taking. That could be this kind of cynical play that, like, you know, Powell can be as hawkish as possible and the market will still interpret it as dovish. I don't know. But we are getting a lot of wild flows here. So I think that it is impossible in this situation to really make a firm conclusion. It's just too difficult to make a firm conclusion on what the market really thinks about his speech. I have to say, the liquidity was pretty crazy to see while he was speaking. And it is still pretty soft here. 500 lots out there. This is the last day of the contract too for the 10 years, so I don't know. Not the last day of the contract, but you know, this is like first call. So might behoove us to come in and pull up the next month, huh? No. I want December. Why do I not have that December on here? You people are crazy. You took something at 41.60. Y'all's crazy. Let's see here. It should be ZNZ, right? Well, ZNZ is about the same. It is starting to look like maybe the Hawks went out here, but I don't know. Been a little bit of volume there in the micro at 06. I wish I had been able to catch that spot that I saw at 03. Maybe after I missed that, I should have just hit into it anyways. Because I've been just a little bit too nervous to do it above 5. But if I had cut it down there, I could just be going like, oh, okay, that's fine. You just take your profits right here. Well, when I look at the 10-year, the volume doesn't seem to be telling me too much. But when I look at the 5-year, the volume seems to be telling me a lot. Maybe what I should be doing is just be holding bids in the 5-year and hoping that somebody trades into me. Oh, wow. That was interesting how that played out. So now we're back to 07, huh?
So traders now price in a 50% chance of a 75 basis point ECB rate hike in September. So again, that's ECB there. Traders price in 50% chance of a 75 basis point ECB rate hike.
Might have been a more significant
So this is
pivot.
most likely linking back to a comment we did hear from sources earlier. Because of the deterioration in the inflation outlook, some ECB policymakers want to discuss raising interest rates by 75 basis points next month. Traders now pricing in a 50% chance of that.
No? That's all they get, huh? Well, they might not be done. It seems like there was a little bit of a shift in the order flow there, but let's just give it some time. Oh, it definitely takes time for the market to digest. I mean, the liquidity is just so light that I honestly, I suspect that it is going to move lower in the end. I'm not sure if I like these prices for it, but the 5-year in particular is, you know, that's going higher. That's why I'm like this liquidity situation over here in the 5. I guess the 10-year is okay, or the 2-year is fine too. We could do it in the 2-year. No, I'm not gonna mess with the 5. That's dangerous. Well, they're kind of getting back towards those lows. Five-year leading the way, flatter. This could be the Federal Reserve is gonna, oh my, somebody puked that. Oh, somebody really puked that. Wow. That was exciting. Am I overhyping that one? That was exciting, was it not? Somebody just puked like 3,000 contracts and shoved it down to the lows. Now they're going to break new lows. Yep, there's a new low. Wow. That was pretty decisive, wasn't it? Yeah, impulsive. Yeah. somebody was definitely, I think that there was a big guy was taking the opposite trade, and that was probably like his break-even point. And he was like, well, this isn't working out, and bailed. That, or it was somebody that was just really in a bad trade and gave it up. I still wish that I had taken 03. Like it was 03 and I didn't click it, and so I was like, no, not 04, not 05, not 06. Yeah, it was terrible entry by me, but what you gonna do? Okay, now we have a little bit of a problem here, because there's the liquidity is gonna be pretty damaged now, all the way from 13 to 10. So that's likely to make things a little bit stressful here. But I am kind of thinking that they could go back to the price levels that we had 2 days ago, where we were at, what was it, 3.1? At least to 3.1 would seem like a good target on a swing trade. Yeah, that move down was pretty decisive, but yeah, there's all sorts of wrangling around that they were doing in like the 08 area yesterday. So we may have just seen a key turning point, but let's not get too excited or
China firmly opposes the US Senator's Taiwan visit.
What is the word? Too in love with a position, right? And I got 30 minutes. S&P 500 coming down. And what else are we seeing? Bitcoin giving up all of its gains. Ouch, 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 ouch on that one. And gold too. But they're all kind of mirroring the same pattern. So for now, it looks like that the markets, what do we say? The correlations all seem to be pretty smoothly in line with each other. There it was, like I said, like that whole area is where there was the stop run has poor liquidity, so pretty easy to slip back and retrace it.
So noting that the US yield curve further inverts, the gap between 2 and 10-year yields falling 36 basis points post Powell's speech.
My news squawk was noting that the yield curve was inverting, and I'm just going like, yeah, it really is inverting, isn't it?
China says they are to continue with strong measures in order to safeguard their territory.
Of course, the prices that I got were terrible. Man, okay, so something else I'm only just now noticing, but like you remember I was saying in the 10-year, well, the volume seems a little bit iffy, and okay, but when they dumped there at the lows, they dumped, and that move just outweighs everything else cumulative delta wise in the treasuries. So now it may be the case a move like that could have been kind of like a crescendo event, right? I mean, right now they're kind of suggesting that it was, but it could also be like, you know, that's the pullback. Because, well, I don't know how to sort it out. I'd like to think that there's more orders out there to sell. and that this could in the end be a very, very negative day. But you know, like the cumulative delta could go down another 20,000 contracts, but maybe I'm wrong. S&P 500 still looking sad though. Maybe if the S&P 500 cries too hard, that'll save them. And oil, by the way, earlier we were like, what's going on with oil? Why did oil sell? Well, since then, they came all the way back up to 93, and then they've been trading back and forth in like this $1.50 range. Talk about chop in oil. That's nasty action to be trading, I think. It's much easier to talk tough on rates when stocks are holding in. That's a good point. Look at that. Well, I've had about the same amount of excursion on both sides now. See, now here's a right-wing commentator, Ed Morrissey from Hot Air, and he says it looks like Joe Biden's Inflation Reduction Act left Jerome Powell as underwhelmed as everyone else. What else does Powell know that we don't? ? Breaking, Powell declares war on inflation, predicts pain ahead. That's not the headline that I would have put out, but it's interesting that you're already seeing people trying to tie it to, okay, the Federal Reserve doesn't think that what's been going on the fiscal side is very good, and that they're concerned about having to raise rates further and stuff. Powell talked, Forex Live tweets, Powell talked about being, quote, forceful twice in the speech, which is a word he hasn't used in this hiking cycle. Large iceberg at 18. Oh, and there's a large order at 05 in the 5-year. Ooh, and that seems unnecessary. Well, not unnecessary. It seems suspicious, though. That is kind of like if I was trying to spoof and push things up so I could get some fills short, that's exactly where I would be putting it. If the treasuries were to take a turn back down somewhere around here and then break lows again, then you would have a really, really clear downward chart with just a really wide range. But I think the question here is, are there still more orders to sell? On this rise back up, I am not seeing a change in orders. This looks like post meta order pullback, falling into a very large liquidity hole and an extremely large range because of the amount of volatility in the light book that we have. But we'll have to see if more selling does come through. At the moment, it does look like there is a little bit of selling coming through in the 10-year. You know, if more selling does come through, how far they'll be able to push it, and will there be some resistance down in this area? S&P 500 breaking some key like yesterday's lows and so forth here. Might be part of it, and I am getting enough in the the 10-year to get like orange candles now. At the moment, though, while I am seeing a little bit of selling, it's not enough to move it measurably off of this upward trend that we're getting so far. So maybe next FOMC in September will be more dovish because after this speak, I think that if you were gonna get more dovish, that you wouldn't want to be doing it in September. So the issue, the difficulty in this area is that the question is still, will September be a 50 or a 75 basis point hike? And I don't feel like that speech really gave us a clear indication of that. You know, really, it's going to be the next jobs report and the CPI that tells us that. Based on the PCE that we just got, I'd have to think that maybe that data will be a little milquetoast and it'll be a 50 basis point hike. But for the things that we're trading, I think that we kind of have to look beyond September, right? The real question is, what is the terminal rate? And I think that what Powell was saying there is that the terminal rate is higher than 2.75, right? But there's quite a bit of back and forth here, this spot in the treasuries. This is like kind of exactly where I would expect there to be some pivoting, but like, look at the deltas. If I come over here to the charts, the 10-year is selling some more, the 30-year is buying some more, the 5-year is selling. So it does look like this is a bear flattener, and that we might continue to see interest rates rise, but it's making it difficult to trade in the treasuries because of the spreading, and the 30-year in particular kind of pushing. They're almost like going opposite directions. Like the degree of steepening that we're seeing here flattening that we're seeing here is quite strong, I would say. Kind of the issue that I'm seeing, though, like, let's just say 10-year comes out of this range at below 16, let's say. 10-year gets below 16. But how much more selling would you need to get down to lows again? Because we've already seen a decent amount of selling. We've seen another 5,000 contracts net sell up in here. How much more can there actually be out there? Well, I suppose there could be tons, but if there's so much, why aren't they coming in? You know? It's one of those interesting situations where, because of the liquidity, the market orders don't actually tell you which way it's going, right? Personally, for you, 75 basis points is clear now for September, but let's see. Well, let's go and check the FedWatch tool, yeah? Can we see a change in the FedWatch tool yet? Compare. Well, it seems like that at current, the expectations of a 75 basis point hike are less than 1 day ago. So, but less being like now, what is this, 54% versus 64%? That may yet change as the day goes on. But I suppose that would be as good of a reason as any to come in and try and go short the treasuries right here, huh? At the moment, they're kind of the high. Okay, so there's an iceberg offer there at 19 that it looks like scared a couple of traders. So not quite to 16, but those last few ticks slipped through very quickly. So now I'm kind of seeing that, you know, if the selling does come through, you might see a lot of pulling on all these prices. That's what I'm concerned about, is like if we come into like 14 and like bids hold, you know. Yes, we are also need to start considering that it's Friday. I think there's probably another move left in this, but you know, as the day gets on, it gets a little bit more fraught, right? Well, it looks like that iceberg isn't there anymore. Also want to note that this pullback here in the 10-year from 10 to 18 was not reflected in the Japanese yen. Wasn't really reflected in many of the instruments. So it is probably more related to supply and demand issues in the 10-year itself. This is my read from all of that. Well, there's 16.5, 16, maybe. Nobody's hitting it. There you go. Well, that's at least enough to create a noticeable shift in the chart, but look at them come back up to that 18. Oof.
The German coalition talks on windfall tax gain momentum.
Promises to pay student debt system not in place yet, I think. Well, but you don't. Well, I don't know how they do that from a record keeping standpoint. The whole thing is that I don't know how long it takes, but I'm sure that, you know, here in the next 30 days that there's going to be some court cases and stuff about it, right?
Tax on energy companies is gaining momentum as the ruling coalition seeks to resolve a dispute over who should shoulder the burden of soaring gas costs.
Not sure about that this latest little push up. You know, it was both down and up on very little volume.
So they did note that one possible option would be to impose a tax only on companies profiting from the gas levy. So this is according to government officials who asked not to be identified.
The 30-year is almost to its highs, by the way. I really need to figure out how to turn off those freaking Teams notifications. Like, I went in and I turned it off, but they still come. This is difficult because that move up was not very good in my opinion, but everything that I look still kind of has me undecided on what this does in the end.
This report here does also note that Russia is...
I suppose it's possible that they come in and they end up finding some balance in here, maybe at 18.
Klaus Mueller, president of the...
I hesitate to say that, mostly because I just don't want it to, I guess. Let's see here. Powell says we are moving our stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. And then he has another quote: restoring price stability will likely require maintaining a restrictive policy stance for some time. And he says expeditiously, arrow pointing to purposely. So that means they've been doing expeditiously. Now they're saying purposefully.
Prior read 2.66 billion.
Let's see here. We got anything else from Nick here that I missed? Powell, while rate increases will slow growth and inflation, they will also bring some pain to households and businesses. Those are unfortunate costs of reducing inflation, but a failure to restore price stability would mean far greater pain. So I think that Nick is just trying to point out the intentional language changes that Powell made here. So that is a change. I don't know if purposefully is that big of a deal, but okay. Yeah, and that little spike higher is kind of coming back off. 18.5 is what I show as seller cost basis. So is it rollover chop horror action? That may be what this is. Yeah. I am the thing I'm worried about right now. I do think that we could see a move lower, especially if, you know, like the new front month is pushing one way. That could change things, right? But that stop run that led to new lows was so aggressive and impulsive, and then ever since then it's been pulled back and sideways, right? So that says to me that we had a large sell meta order, somebody bailing on a position at the worst spot, and then all of this stuff has just been noise on the pullback. So what do you actually, is there actually going to be another move after this? Uncertain. Given that it's a Friday, I think you kind of have to ask yourself if there really is going to be another move, right? Like, maybe 18 is just the price. That seems wrong to me, but did you see anything weird happen there at the bottom? No, you didn't. In the options, see the red line. Yeah, well, it looks like there was some people took some puts at about a little bit after it started pivoting and it was going down, but then there wasn't any change since that pivot at the lows. It's interesting. So when I'm looking at Twitter, so like the last tweet that I have on my list was the tweet from Nick where he noticed that Powell moved from expeditiously to purposefully. That was 3 minutes ago. It's just way less activity on Twitter than I would expect given the circumstances. Hey Jacob, how have you been? You missed all of the zaniness. I'm not going to say the fun. I mean, there may still be some fun to come, but during Powell's speech, it was pretty all over the place, wasn't it? So see, like some tepid tests of the lows. Volume's not terribly forceful. Bids aren't jumping out of the way, not yet. I mean, that was 300. And then look, 119, 15, 190, 150, 89, up 3 ticks. I'm not sure what's driving that. That might have been from the 5-year. Year long, 10-year yield, and short the euro. Interesting. Well, short the euro is probably working really well right now, huh? This is so the thing that I find really interesting about all of this is that the treasury is kind of looking a little wishy-washy right now, and like,
the top of the
maybe we don't do anything. That could be short-term supply and demand problems with, we've got the rollover, like final call and all that sort of stuff, or first call rather. The roll in the treasury is one factor. But then when you go and you look at the currencies, it's pretty clear direction. The dollar is still moving up, etc., etc., etc. So I kind of wonder. So here's a question for you guys. Not so much a theory. We might be able to get a theory out of it, but for now, I think it's just a question. How does the 10-year treasury react here in this situation compared to the micro yield futures? Because in the 10-year, you're going to have these fluctuations created by the roll, but you don't have a roll in the micro treasuries. So you might have an opportunity here to say, go long rates in the micro treasury yield futures, and just kind of hold it. And then come Monday, when nobody wants to have any positions on in the treasury because of first call, then rates can go to where they actually need to go. You know what I mean?
So Senator Van Hollen has given a statement.
So I'm not stating it as a theory that I think that that's going to happen. It's just a question. I want to see if that is a force. Because at some point, I think there's got to be a situation where the difference between when the main treasury futures roll over and when the micro treasury yield futures roll over matters. And you might not even necessarily be able to see it. Because I think that the micro yield futures would continue to just be in line with the main treasury movements in correlation. Perfect correlation. S&P 500 is below the previous day's lows, at like 41, 42 or something like that, and just kind of been chilling here for maybe the last 20 minutes, kind of very similar to what the treasuries are doing. Although I do have to say, the treasuries to the lower end of the range, not breaking out, not seeing a huge move. 8:30 was the time, so if there was going to be like another leg of a meta order, maybe you would want to wait another 15 minutes to execute it. So I'm probably not going to be here to see it, huh? I guess I'm gonna chalk this down as a average loss today, and we'll see. Anyways, and hope I do have a video in the works. I don't think it will be out on Monday though. It might be midweek, so we'll see. So see you then. In the meantime, stay excellent, team. That's what I want to say. I'm kind of like Stay Profitable Friends was funny, but I kind of like this better. It has more purpose to it. Stay excellent, team. All right.